Hi guys, a pleasant day to you. This is your Sir Kevin O, and here is my discussion on accounting for income taxes. Before we start, I would like to say that we are going to structure this discussion into two parts. The first part is the concept discussion. We'll keep it short para di na kayo mabore masyado, ano? That is for theoretical questions para meron kayong konting tulong on how to answer and address these theories. The next part is what will interest you more. It is more of problem solving. So accounting for income taxes, we will know about temporary differences, permanent differences, and how to account for them in problem solving. That is your second part. Okay? I don't mean to keep you for so long in this introduction, so let us get this started without further delay. Una, let us have first a recall of what are taxes. Ano ba ang mga taxes na to? Here's the definition. Taxes are involuntary fees levied on individuals or corporations and enforced by a government entity, whether local, regional, or national, in order to finance government activities. So this is taxes in general. Pero ang topic po natin ay accounting for income taxes. So that is going to lead us to a necessary specification of what is income tax. Ano yung income taxes? Well, you already know this maybe, pero just to be safe, an income tax is a tax that governments impose on income generated by businesses and individuals within their jurisdiction. For the purpose of accounting for income taxes, we are presuming that our client is going to be a corporation. So, keep that in mind. Ang ina-account po natin ay income tax for a corporation. Okay? So, accounting for income taxes, how does it work? But before I proceed to accounting part, to understand past 12 income taxes better, we must first be familiar with the relationship of the following terminologies. So ito po ang ibibigay ko sa inyo, kailangan nyong ma-familiarize, kailangan nyong maintindihan in order to understand the further discussion. Know what income tax expense means. Compare it with current tax expense. And to understand how deferred taxes arise. Itong tatlo pong ito, they are the result of your accounting for income taxes. And sila po yung pinaka-bida in this discussion. Income tax expense, current tax expense, and deferred taxes. Let's start with income tax expense. Ano nga ba yung income tax expense? Your income tax expense, it is the accrual basis income tax amount recognized for financial reporting purposes as a deduction in arriving at net income. So ito yung amount na makikita natin sa income statement under the expenses portion. And normally it is computed as follows. Income tax expense would be equal to the earnings before tax based on financial standards, yung accounting standards natin sa financial accounting. Earnings before tax multiplied by your tax rate. That is how you get income tax expense. And again, I would like to say, alam nyo na to, pero let us just keep this in mind. Know that earnings before tax includes all items of income and expense to be recognized as required by PFRS. So, one thing that you should note is that income tax expense is financial income. It's PFRS income. Now let's move on to the Now let us move on to the current tax expense or your tax due. Ano to? This is the amount of tax to be paid to the BIR to settle tax obligations for the current period. As the term would imply, current tax expense pertains only to the current period. And if we are going to file our income tax return with the BIR, we would only include the amount that we have to cover for the year. So kumbaga, ang nakakover lang dito is the current obligation to the BIR. Okay ha? Current tax expense, current obligation. Pero sa income tax expense, it is the accrual of the expense. And you know for a fact na hindi lahat ng expense natin ay nabayaran na because some of them might be accrued expenses. I don't mean to confuse you guys, pero one thing you should remember is that current tax expense is ano yung ibabayad natin sa BIR. Whereby, yung income tax expense naman, ano yung expense na dapat ilagay sa income statement natin. So, to move further, your current tax expense is computed as follows. Current tax expense is equal to taxable income multiplied by tax rate. As you might have noticed, our current tax expense and compared with our income tax expense earlier is both multiplied by the tax rate. And if you are wondering, yes, they are the same tax rate that you will be using. Saan lang sila nagkaiba? They differ only on the base to which the tax rate is multiplied. Current tax expense uses taxable income. Your taxable income is the amount of income presented in the income tax returns submitted to the BIR. Okay? Current tax expense, BIR payment. Income tax expense, it is the amount in your income statement. Now let us compare the two, tax expense and current tax expense. Ano nga ba yung underlying differences? Ano nga ba yung similarities, if any, of income tax expense and current tax expense? Well, the tax on income tax expense is computed based on earnings before tax. On the other hand, the tax computed is based on taxable income for current tax expense. Ito yung na-notice nyo kanina na point out ko, ano? Let's move further. Income tax expense is computed based on the guidance of PFRS or GAAP. It is as prescribed by GAAP, whereby your current tax expense is governed by tax laws. Ano yung current obligation mo, yun yung source kung paano na-compute yung current tax expense. Then in our income tax expense, the recognition of income and expense is based on accrual basis of accounting. Accrual basis of accounting, again, not necessarily needs payment pero kailangan ng i-expense. On the other hand, our current tax expense or our tax laws or the BIR will have recognized income and deductible expenses on a modified cash basis approach. In arriving at taxable income, ang ginagamit po na principle in computing income and deductible expenses is a modified cash basis approach, which is different from your PFRS accrual. Okay, sir, why is this all necessary? Why do we have to keep note of the differences between the two? For one, I can say that itong dalawang to, they are the most wanted requirements in your problem solving. Okay, so we are laying down the foundation of their concepts before we go into trying to solve for them. Pero ano ulit yun? TLDR, ito yung paboritong itatanong sa'yo kung ang topic ay accounting for income taxes. So it's better to know the workings or the behind the scenes. Income tax expense. I would like all of you to note this. The term income tax expense includes current and future tax consequences. So, the term income tax expense encompasses current tax expense. Ano yun, sir? Itong current tax expense, nakalakip yan sa term na income tax expense. Kumbaga, the current tax expense is just a parcel or a portion of our income tax expense. Let me erase that one. Okay, ha? Tapos itong sa current tax expense naman, it only includes the tax obligation for the current period only. Redundant pa ang only. Kasi I would like to emphasize na pang current year lang talaga to. Okay? Current tax expense. While income tax expense, anong pinagkaiba nila? It also includes future tax consequences. While it is not impossible for tax expense to be equal to tax due, meaning income tax expense equal to current tax expense, it's not impossible that it will happen. This situation seldom happens due to the fundamental differences of accrual basis and modified cash basis. It's rather rare to have current tax expense and income tax expense to be equal, but again, it's not impossible. The differences between income tax expense and tax due represents future tax consequences. Future tax consequences is included in the term income tax expense, but it is not a part of current tax expense, of course. So, the problem here now is, what represents future tax consequences? That is when the third terminology that I presented to you earlier comes into the picture. You have deferred taxes. Future tax consequences are deferred taxes. The difference between income tax expense and current tax expense will be your deferred taxes. In a moment, I will be presenting computations of how we arrive at the three and their relationships and the components that lead to their computation. Okay, so relax lang tayo. Deferred taxes. Let's go. So deferred taxes. Deferred taxes represent future tax obligations and deductions arising from items of income or expense recognized in the current financial statements, but are not subject to taxation in the current period. In short, wala ka pong naintindihan sa binasa ko. Okay, let me clarify. Deferred taxes are already expense during the year, but you are not yet obliged to pay them during the year. Ano, sir? Opo, expense na sila during the year, or let's say it's already included in the computation of our financial income. Pero hindi pa sila part ng computation ng tax due or ng computation ng taxable income. Pakiulit, sir, yung last part. It's included in financial income already, consideration, pero it is not yet included in taxable income. Padayon. The income or expense is already recognized in the income statement, but they are not yet taxable or deductible for the current period. This is what I was trying to say earlier. And deferred taxes arise when the amount of earnings before tax and taxable income are not equal. So, two terminologies are included here. Earnings before tax and taxable income. We are now comparing the two. Kapag hindi daw mag-equal ang computation mo ng earnings before tax based on PFRS and taxable income based on tax laws, what will arise is deferred taxes. But I'll have you note, guys, that when we multiply the two of them with the same tax rate, we get the following amounts. The tax rate is the same, pero if earnings before tax and taxable income is not equal as we have established earlier, that would also mean that our income tax expense and current tax expense will not be equal. Thus, the resulting difference will be your deferred taxes. So let's talk about them more. Deferred taxes. Deferred taxes. Let's concern ourselves with earnings before tax and taxable income. Paano nga ba nag-a-arise yung deferred taxes, sir? Well, it starts from this. The difference between earnings before tax and taxable income is often referred to as tax differences. They can be classified into permanent and temporary differences. To which is spoil ko na kayo, guys, ha? The source of deferred taxes are temporary differences. Pakinote to, no future tax consequence will arise from permanent differences. Okay? Walang future tax consequence to. Alin lang ang meron? Temporary differences lang po. Ito lang ang magiging source ng deferred taxes natin. If I would compare side by side earnings before tax and taxable income, ang tawag po natin sa difference na to is simply tax differences. Ito yung mga amount na nasama sa earnings before tax pero hindi kasama sa computation ng taxable income. Or, it could be temporary differences na nasama sa taxable income pero hindi kasama sa earnings before tax. It could be one way or the other. Okay? Temporary differences. Kasama sa taxable pero hindi kasama sa earnings before tax. Or kasama sa earnings before tax pero hindi kasama sa taxable income. Pero if we are talking about permanent differences, they are items of income and expense that are either non-taxable or non-deductible. Kapag permanent differences po, kasama sa earnings before tax, pero never siyang masasama sa taxable income. I know it could get a little bit confusing, pero I hope we can shed more light into this kung nasa problem solving na tayo or nasa further into later slides tayo. So I hope we can fully differentiate the permanent differences and temporary differences. Permanent and temporary. So let's focus on those. Ano nga ba yung types of tax differences? We have the first one, permanent difference. This pertains to items that will be included in either taxable income or earnings before tax, but never included in both. Take note, the keyword is never. Kasama in either side, but never in both. Never now or in the future. Okay? They are items of non-taxable income and non-deductible expenses. There is no future tax consequence for permanent differences. On the other hand, temporary differences pertain to items that will be included in both financial income and taxable income. Financial income, by saying financial income, guys, it means earnings before tax and taxable income. Okay ha? Temporary difference. Pansamantalang pagkakaiba. It is termed as temporary differences because essentially, it should be included in both. But they only differ in the timing. They are recognized in different reporting periods or years. Kumbaga, an income could be included in financial income during the year, pero not yet taxable. Kailan pa siya matatax? Maybe next year. An expense could have been included in your earnings before tax computation during the year, pero hindi pa siya recognized in tax on the current year. Baka masama siya next year or the year after that. Okay? Or whenever. Depends on modified cash basis. So your temporary differences, it gives rise to deferred tax liability or asset. Deferred tax liab or deferred tax asset. Opo, ang deferred taxes, it could either be a liability or an asset. Depending on whether we have a future liab or a future deduction. Let us discuss better the temporary differences. Your temporary differences can further be classified into taxable temporary differences and deductible temporary differences. These are items of income and expense that are included in both, but in different years. Included in both financial and taxable income, but they are included in different years. So, deferred taxes, guys, yung earnings before tax natin, tapos yung taxable income natin, kapag meron tayong differences na permanent and temporary differences, we can actually reconcile your taxable income. And normally, tinatanong din to sa problem solving. What is your taxable income? We are not discussing income tax here, we are not discussing the subject income tax. So the way we compute taxable income is not from getting your gross income, your deductions, and the rules on OSD. Hindi po yun ang ibig sabihin ng pag-compute ng taxable income dito. Under our discussion here in accounting for income taxes, what will be normally given in problem solving is your earnings before tax. And you will be made to compute taxable income from that. And the way to do it is by recognizing what the differences are between earnings before tax and taxable income. Permanent differences. I should have added here plus or minus. Okay? If there is a non-taxable income, that is a deduction. But if there is a non-deductible expense, that is an addition under permanent differences. After deducting permanent differences, you would get the term earnings subject to tax. Ito yung amount ng income na matatax, whether in the current year or in the future. From that earnings subject to tax, you need to remove the amounts that is not taxable during the year. Amounts of income and amounts of expenses that is not included at taxable income for the year. They are your deductible temporary differences and your taxable temporary differences. Deductible temporary differences and taxable temporary differences, I will elaborate later, pero I'll have you know that deductible temporary differences will result to deferred tax asset. Meanwhile, taxable temporary differences will result to deferred tax liability. Pero sige, i-explain ko na lang sa inyo ngayon. Deductible temporary differences. Pag sinabing deductible temporary differences, guys, ito yung mga amount ng income na hindi kasama sa earnings before tax. Income na hindi kasama sa earnings before tax. Pero under the tax laws, dapat daw siya masama. What are the examples, sir? Advance collection from customers. Di ba kung may sales ka, i-record mo yung income when the sale happens? That is under financial accounting principles. Pero I'll have you know that for taxation, such income will be recorded when the cash has been received. And there might be differences sometimes on the date of when the sale actually happens and when the collection happens. Pero ang kailangan mo lang tandaan, ang income po nire-record under financial principles, under GAAP, when the sale happens, when the shipment occurs or received, or it is received by the customer. But on taxable, in our tax laws, the recording of the income will happen when the collection has been made. And when there is a difference between them, we might arrive at deductible temporary differences. May income na kasama sa taxable pero hindi kasama sa earnings before tax, that will result to deferred tax asset. Pero on the flip side, kung may income na kasama sa taxable income, I mean earnings before tax, nasama sa earnings before tax, pero according to our tax laws, hindi pa siya taxable this year, that will result to a deferred tax liability. Once again, I would like to say, although I said this multiple times already, it will get confusing without figures. I will no longer linger into discussing this one kasi po, this is better when we are problem solving. Better discussed when we are problem solving. Temporary differences, taxable temporary differences, and deductible temporary differences. I may have mentioned a few things about them earlier, Pero let's cut to the chase now on what these are. Your taxable temporary differences is a future taxable amount. Okay, taxable temporary difference, future taxable amount. And your deductible temporary difference is a future deductible amount. Your taxable temporary difference will result to a deferred tax liab. Meanwhile, the deductible temporary difference will result to a deferred tax asset. And normally, taxable temporary difference result in a circumstance where its existence causes earnings before tax to be greater than taxable income. So if there is an item of income or expense that causes your earnings before tax to be higher than taxable income, that is a taxable temporary difference. And on the other side, if there is an item of income or expense that causes your EBT to be lower than taxable income, that is a deductible temporary difference. In principle, kapag meron kang income na na-record sa EBT, pero according to taxation, it should not have been there. Meaning, may income ka na na-record pero hindi siya taxable. What is that? Hindi siya taxable this year. It means that you are enjoying an income free of tax during the year. Pero the consequence is, pagka future period, maaaring matax ka. Na-include ko siya sa income ngayon, pero for taxation, it will be included in a future date pa. Which is why it is a future taxable amount. On the other hand, merong income na tinax, pero according to financial accounting, hindi pa dapat kasama. Pero sabi ni taxable income, dapat itatax ko na yan. Okay? Tinax ka na pero wala ka pang income. Kailan mo pa magiging income yan? Maybe in the future pa. Which is why it is a future deductible amount. Kasi later on, magiging income mo na yung item pero hindi mo na siya isasama sa taxable income. Know that deferred tax liability is a future tax obligation arising from a future taxable amount. And that deferred tax asset arises from future tax reductions resulting from a future deductible amount. The challenge in terms of figuring out the computation, guys, is determining whether an amount is a future taxable amount or a future deductible amount. Dito talaga nasa-stuck yung student. Dito natatrap. Mahirap i-ascertain ang isang amount, whether it's a future taxable amount or a future deductible amount. Okay? But let me get back to the previous slide. Ang hint po natin, if you are trying to identify an item of income or expense, if you are trying to identify if it will result to a deferred tax liab or deferred tax asset, ito po ang una mong titignan. Try to think to yourself, will this income or expense cause my EBT to be greater than taxable income? Or will it cause my EBT to be lower than taxable income? From that point, ascertain what will happen if this is the case, if that is the case. Okay? Ito lang gagawin mo. Then, after determining whether you have a future taxable amount or a future deductible amount, makukuha mo na ang deferred tax liab and deferred tax asset. tax differences, we talked about temporary differences a lot earlier. We will still be talking about them in problem solving. Pero I'll give a few examples of permanent differences. Ano yung permanent differences? Again, non-taxable income and non-deductible expense. If I may say so, ito yung mas madali i-identify na mga items. They are items that should not be included in taxable income because maybe they are exemptions or maybe they are subject to some other taxes like percentage taxes. Take note, we are talking about income tax here, ha? Yung subject sa 30% tax or if we're going to consider the CREATE law, 25 and 20 na corporate tax. So, eto po ang mga permanent differences. Ang common examples ng permanent differences. Dividend income is normally included in your financial income, but it will never be included under taxable income. Interest income on deposits, in the same manner as dividend income, kasama siya sa financial income, pero hindi siya magiging part ng taxable income. Because both of these items are subject to percentage taxes and not income taxes. Insurance premiums paid the entity as beneficiary and insurance claims received. This can be considered as income if we are talking about financial income, insurance claims received. And insurance premiums are an expense under financial accounting. Pero we know under taxation that this will never be a deductible expense and insurance claims are not part of gross income. And lastly, your tax consequences. Tax consequences like fines, penalties, etc. are included as expenses in financial income, but it will never be part of your deductions in taxation. In summary, what I have listed here are the common permanent differences that ang gagawin mo po dito, pag nakita mo ang item na to, automatically kailangan mo siyang tanggalin. Dividend income, nag-record daw 100,000. Tanggalin mo yan. Because if you are computing current tax expense, it will not be part of taxable income. In summary, these are the items that are not included in taxable income but are included in the term earnings before tax. Temporary differences naman, if you are trying to identify temporary differences, income statement approach and balance sheet approach may be used. Trying to find a taxable temporary difference, na i-present ko na ang information na to kanina, pero ang in-explain ko pa lang is the income statement approach. I'll have you know that there are two ways of identifying a taxable temporary difference. You have income statement and balance sheet approach. It is an item of income or expense that causes financial income to be greater than taxable income. Or it causes an assets carrying amount to be greater than its tax base or what is recognized for taxation. That is your taxable temporary difference. Also, if it is related to a liability, the liability's carrying amount would be less than its tax base. Deductible temporary difference naman, normally, everything but opposite of taxable temporary difference. Deductible temporary differences, financial income is less than taxable income under income statement approach. Balance sheet approach naman, it causes your carrying amount of the asset to be less than what is recognized for taxation. And your liabilities carrying amount to be, this should have been greater than tax base. Okay, just a review. Yun. I made a mistake here. Liability should have been greater than. Okay? So, that's it for theories. Thanks for watching this theory discussion, but let us now proceed into the meat of our lecture, the problem solving. I'll see you in part 2.